Hello and welcome. Over the next 15 chapters, we are going to embark on a journey together, exploring a topic that is foundational for anyone aspiring to a career in the world of finance, education. Specifically, we will be taking a close look at 5 of the most distinguished universities in the United States for a degree in finance. This series is designed for the ambitious student, the curious parent, and anyone who wants to understand what makes a top-tier finance program truly exceptional. The world of finance is a powerful engine of our global economy.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
It's a vast and complex field, shaping everything from the growth of innovative startups to the retirement plans of millions. A career in this sector can be incredibly rewarding, offering challenges that will test your analytical skills, your strategic thinking, and your ability to navigate an ever-changing landscape. But before you can build a successful career, you need to lay the right foundation. And for many, that foundation is a world-class education. Choosing where to study finance is one of the most significant decisions an aspiring professional can make. It's about more than just a name on a diploma. It's about the knowledge you will acquire, the professors who will challenge you, the peers who will become your lifelong network, and the unique opportunities that will open doors you may not have even known existed. The right university doesn't just teach you the principles of finance. It immerses you in a culture of excellence and connects you to the very heart of the industry. So, what exactly sets the top universities apart from the rest? When we talk about the best schools, we're looking at a combination of critical factors. First, there's the faculty. The leading institutions are home to brilliant minds. Professors who are not only gifted educators but are often pioneers in their fields. They are the ones writing the textbooks, publishing the groundbreaking research, and advising corporations and governments. Learning from them provides a depth of understanding that goes far beyond standard curriculum. Next is the curriculum itself. A premier finance program offers a curriculum that is both rigorous and relevant. It provides a deep grounding in the core principles of corporate finance, investments, financial markets, and analysis. But it also evolves, incorporating cutting-edge topics like financial technology, or fintech, quantitative analysis, and sustainable investing. These programs are designed to produce graduates who are not just prepared for today's financial world, but are equipped to lead in the financial world of tomorrow. Then there's the network. The people you meet in college, both your classmates and the alumni, can be one of the most valuable assets you gain. Top universities attract some of the brightest and most driven students from around the globe. These peers will push you to be your best, and will go on to become leaders in their own right. The alumni network of an elite institution is a powerful resource, a global community of professionals who share a common bond, and are often willing to help fellow graduates navigate their career paths. Finally, we have to consider career opportunities. The world's leading investment banks, asset management firms, and corporations actively recruit from a select group of universities. These schools have dedicated career services that work tirelessly to connect their students with internships and full-time positions. They host networking events, bring top employers to campus, and provide coaching to help students excel in competitive interviews. Attending one of these universities can significantly enhance a graduate's access to the most sought-after roles in the industry. It is important to state clearly that this series is for informational and educational purposes only. The landscape of higher education is vast, and the best school is ultimately a personal choice that depends on an individual's goals, interests, and circumstances. We are not providing financial, investment, or career advice. Our objective is simply to present a well-researched overview of what these 5 renowned institutions have to offer, based on publicly available information, and their long-standing reputations in the academic and professional communities. We will not be telling you where to invest your money or which career path to choose. Instead, we aim to provide a clear and objective picture to help you in your own research and decision-making process. In the chapters to come, we will dedicate time to each of our selected universities. We'll explore their unique histories, their specific approaches to teaching finance, the structure of their programs, and the campus cultures that define them. We will look at what makes each school a powerhouse in the field, and why they consistently produce graduates who go on to shape the future of finance. Our exploration will take us from the historic halls of the Ivy League to the innovative campuses of modern research universities. Each has its own distinct character and strengths. By the end of this series, you will have a much clearer understanding of the educational landscape at the highest level, and what it takes to build a successful career in a dynamic and demanding field. Thank you for joining me for this introduction. In our next chapter, we will begin our deep dive with our first institution, a university whose name is synonymous with finance and business education, and a school that has been a leader in the field for over a century. We will head to Philadelphia, Pennsylvania, to explore the Wharton School at the University of Pennsylvania. Welcome back. In our last chapter, we set the stage for our journey, outlining what makes a university a powerhouse in the field of finance. Today, we begin our deep dive with an institution that is, for many, the very definition of a world-class business school. It's a name that carries immense weight in boardrooms and trading floors across the globe. We are traveling to Philadelphia, Pennsylvania, to explore the Wharton School at the University of Pennsylvania. Founded in 1881, Wharton holds the distinction of being the world's first collegiate business school. From its very beginning, it has been a pioneer in business education, and its Department of Finance has long been considered a global benchmark for excellence. When you study finance at Wharton, you are not just attending a top-ranked program, you are becoming part of a long and storied legacy of leadership and innovation in the financial industry. So, what is at the core of Wharton's dominance in finance education? It begins with its faculty. The school's finance department is one of the largest and most published in the world. The professors here are more than just teachers. They are influential researchers who are actively shaping our understanding of how financial markets work. They contribute to major academic journals, consult with leading financial institutions, and play a role in shaping public policy. For a student, this means learning directly from the individuals whose work is defining the future of the field. The knowledge shared in the classroom is not just from a textbook. It's often based on research that was conducted just down the hall. The curriculum itself is designed to provide both breadth and depth. At the undergraduate level, students pursuing a concentration in finance are first grounded in the core principles of the discipline. They build a solid foundation in areas like corporate finance, investments, and financial derivatives. From there, the program offers a remarkable degree of flexibility, allowing students to delve deeper into specialized areas that align with their interests. These specializations can include tracks like corporate finance, capital markets, private equity, and quantitative finance, which is heavily focused on mathematical and statistical modeling. This structure allows students to tailor their education to prepare for very specific career pathways within the vast world of finance. But the learning at Wharton extends far beyond the traditional lecture hall. The school emphasizes an approach that bridges theory and practice. Students have access to state-of-the-art resources, including sophisticated financial modeling software and simulation platforms. A key resource is the Wharton Research Data Services, or WRDS, a powerful data analytics platform used by academic institutions and financial firms around the world. Access to such tools allows students to work with the same complex datasets used by professional analysts and researchers, providing invaluable hands-on experience. Furthermore, student-run clubs and organizations play a vital role in the educational ecosystem. Groups like the Wharton Investment and Trading Group, the Private Equity and Venture Capital Club, and the Corporate Finance Club provide a platform for students to manage real investment portfolios, analyze market trends, and connect with industry professionals. These clubs often organize conferences, stock pitch competitions, and networking treks to major financial centers like New York and London, giving students direct exposure to the industry they aspire to join. Another key component of the Wharton experience is its powerful and deeply engaged alumni network. With graduates holding leadership positions in virtually every major financial institution worldwide, the Wharton network is an incredible asset. The school fosters a strong sense of community that lasts long after graduation. For students, this network provides access to mentorship, industry insights, and a vast web of professional connections that can be instrumental throughout their careers. The name Wharton on a resume often opens doors, largely because of the proven track record of the alumni who came before. This leads us to the career opportunities the school facilitates. Wharton's career services are exceptionally well regarded, offering dedicated support for students targeting the highly competitive financial sector. On-campus recruiting is a major feature of the Wharton experience, with a steady stream of the world's most prestigious investment banks, asset management firms, and private equity funds coming to campus to recruit students for coveted internship and full-time roles. The school's reputation, combined with its rigorous academic preparation and extensive career support, creates a direct and well-trodden path to the heart of the financial industry. In summary, the Wharton School's strength in finance is built on several key pillars: a world-renowned faculty of leading researchers, a comprehensive and flexible curriculum, an emphasis on practical application through cutting-edge technology and student clubs, and an immensely powerful global alumni network. It offers an immersive environment where students are constantly surrounded by the theory and practice of finance at the very highest level. Thank you for joining me for this look into the Wharton School. In our next chapter, we will turn our attention to another titan of finance education, a university located in the financial capital of the world, whose name is synonymous with Wall Street itself. We'll be heading to New York City to explore the Stern School of Business at New York University. Hello and welcome back to our series. In our previous chapter, we explored the historic and prestigious Wharton School in Philadelphia. Today, we move from a city steeped in American history to a city that is the undisputed, beating heart of global finance. Our destination is Greenwich Village in Manhattan, home to the Stern School of Business at New York University. If our last chapter was about legacy, this one is about location, energy, and unparalleled immersion in the financial world. One of the most defining characteristics of NYU Stern is its inseparable connection to New York City. The school doesn't just exist within the city, it is woven into its very fabric. The motto, "An Education Impossible," speaks to the dynamic and opportunistic environment that both the school and its surrounding city provide. This location offers a unique advantage that is difficult to replicate anywhere else in the world. Wall Street, the New York Stock Exchange, and the headquarters of countless banks, funds, and financial firms are not distant concepts. They are neighbors. This proximity creates a learning environment that is constantly buzzing with the energy of the real-world market. At the core of Stern's academic offering is its undergraduate concentration in finance. The curriculum is built to be both comprehensive and cutting-edge, ensuring students receive a robust grounding in the essential theories of finance. Foundational courses cover the critical pillars of the discipline, such as corporate finance and investment analysis. Beyond this strong core, students can explore a wide array of advanced electives that reflect the modern financial landscape. These can range from courses in debt instruments and mergers and acquisitions to more contemporary topics like sustainable finance and financial technology, often called fintech. This allows students to develop a specialized knowledge base that aligns with their specific career aspirations. However, the true distinction of the Stern experience often lies in what happens outside the classroom. The school's location in New York City makes experiential learning a central part of its DNA. While students at other universities might secure competitive internships during the summer, many Stern students have the unique opportunity to hold part-time internships at leading financial firms during the academic year. Imagine attending a class on financial modeling in the morning, and then applying those very concepts at an investment bank in the afternoon. This continuous loop of theory and real-time application provides a level of practical experience that is exceptionally valuable. This integration of industry and academia is also reflected in the faculty. Alongside a team of world-class research professors, Stern's faculty includes numerous adjunct professors who are current or former senior executives on Wall Street. These individuals bring a wealth of practical, up-to-the-minute knowledge into the classroom. They can share insights from a deal that closed just last week, or provide a real-world perspective on a market event that is currently unfolding. This direct line to the industry's front lines ensures the education is not just theoretical, but immediately relevant. Student life at Stern is vibrant and mirrors the fast-paced nature of the city. There is a wide variety of student-run organizations that are critical to professional development. Clubs like the Finance Society, the Investment Analysis Group, and the Quantitative Finance Society serve as hubs for ambitious students. They organize workshops to hone technical skills, host guest speakers from major financial institutions, and run stock pitch competitions that simulate the work of a real analyst. These activities provide a practical training ground and help students build a professional network long before graduation. Support for career development is robust and begins early. NYU's Wasserman Center for Career Development works closely with Stern students, offering services from resume refinement to intensive mock interviews. The school has deep and long-standing relationships with recruiters across the financial industry. Because of its location and reputation, Stern is a core recruiting school for nearly every major financial firm. This results in a steady flow of on-campus information sessions, networking events, and interviews, giving students direct access to a vast number of career opportunities right on their doorstep. In essence, choosing to study finance at NYU Stern is a choice to learn at the epicenter of the industry. Its strength is built on a powerful combination of a rigorous academic curriculum, a faculty that blends research with real-world practice, and most importantly, the unmatched experiential learning opportunities afforded by its New York City location. It is an environment designed for students who are proactive, energetic, and eager to immerse themselves completely in the world of finance. Thank you for listening. Our journey so far has taken us to the established halls of Wharton and the urban campus of NYU Stern. In our next chapter, we will shift our focus to an institution renowned for its intense quantitative rigor and its deep connections to technology and innovation. We will travel to Cambridge, Massachusetts, to explore the finance program at the Massachusetts Institute of Technology, or MIT. Hello and welcome back. Our journey has taken us through the historic halls of Wharton and the bustling, industry-integrated campus of NYU Stern. Today we venture to Cambridge, Massachusetts, to an institution globally renowned for its leadership in science, technology, and engineering. We are here to explore finance at the Massachusetts Institute of Technology, or MIT. Studying finance here is a fundamentally different experience, one that is deeply rooted in mathematics, data, and computational power. At MIT, the study of finance is primarily housed within the prestigious Sloan School of Management. However, an undergraduate education here is distinct. Students don't enroll in Sloan directly. They enroll in MIT and then select a major, which is known by a number. The major for finance is course 15-3. This might seem like a small detail, but it speaks to a larger philosophy. A finance education at MIT is an MIT education first. It is inseparable from the institute's rigorous, analytical, and problem-solving culture that permeates every department. The defining feature of MIT's approach to finance is its intense quantitative rigor. This is not a program for the mathematically timid. The curriculum is built on a bedrock of calculus, statistics, and economics, demanding a high level of comfort with complex formulas and abstract models. The goal is to produce graduates who don't just understand financial concepts, but who can build the mathematical models that price complex securities, assess risk, and drive modern algorithmic trading strategies. The curriculum for course 15-3 reflects this quantitative focus. While it covers the essential pillars of corporate finance and investment theory, it places a heavy emphasis on subjects like financial engineering, data science, options and futures markets, and fixed income securities. Many courses are project-based, requiring students to write code, analyze massive datasets, and develop their own quantitative models to solve financial problems. It is an approach that treats finance less as a set of business rules to be memorized and more as an applied science to be explored. This synergy between finance and technology is one of MIT's greatest strengths. The Sloan School doesn't exist in a vacuum. It is part of a broader ecosystem of world-leading departments in computer science, mathematics, and engineering. This allows for a unique cross-pollination of ideas. A finance student might take a machine learning class at the renowned Computer Science and Artificial Intelligence Laboratory, or collaborate on a project with engineering students to develop a new fintech application. This interdisciplinary environment ensures that students are exposed to the technological innovations that are fundamentally reshaping the financial industry. A prime example of this intersection is the MIT Laboratory for Financial Engineering. This is a research center dedicated to applying quantitative methods to solve complex financial challenges. The work done here is at the absolute cutting edge of the field, exploring everything from risk management and asset allocation to using financial models to fund biomedical research. For students, the presence of such a center provides a direct link to groundbreaking research and the opportunity to learn from the faculty who are leading these efforts. The student body at MIT is, as you would expect, exceptionally bright and highly analytical. The culture is collaborative yet intense. Students are surrounded by peers who are passionate about solving complex problems, whether those problems are in robotics, physics, or financial markets. This creates a powerful learning environment where students are constantly challenged to think critically and push the boundaries of their knowledge. Finance-focused student groups, like the Quantitative Financial Markets Club, provide a further outlet for this passion, organizing workshops, competitions, and talks with leaders from the quantitative finance, or quant, industry. In terms of career pathways, an MIT finance degree prepares graduates for some of the most data-intensive and analytical roles in the financial sector. While graduates are highly sought after by traditional investment banks and consulting firms, they are particularly well-suited for roles in quantitative trading, financial modeling, risk management, and data science within hedge funds and asset management firms. The skills they develop, a deep understanding of financial theory combined with advanced computational and mathematical abilities, are in extremely high demand in an industry that is increasingly driven by data and technology. In conclusion, the finance program at MIT offers a distinct and powerful alternative to more traditional business schools. Its strength lies in its uncompromising quantitative rigor, its deep integration with the world of technology and engineering, and its culture of intense analytical problem-solving. It is an institution designed to produce not just financial professionals, but financial innovators. Thank you for joining me for this exploration of finance at MIT. Having examined programs with strengths in legacy, location, and quantitative analysis, our next chapter will take us to a university renowned for its intellectual rigor and its profound influence on the very theory of modern finance. We will be traveling to the Midwest to discuss the program at the University of Chicago. Hello, and welcome back to our continuing exploration of America's top universities for finance. Having journeyed through the worlds of legacy at Wharton, location at NYU, and quantitative rigor at MIT, we now arrive in the Midwest. Our destination is an institution whose name is synonymous with intellectual inquiry and a groundbreaking approach to economic thought that has reshaped modern finance. We are here to discuss the University of Chicago. To understand the study of finance at the University of Chicago, one must first understand the university's defining academic culture. This is a place that prizes the power of ideas, rigorous debate, and a relentless search for fundamental truths. The university is famously associated with the Chicago School of Economics, a school of thought that emphasizes free market principles and a rational, evidence-based analysis of economic behavior. This intellectual tradition, championed by numerous Nobel laureates who have walked its halls, has had a profound and lasting impact on financial theory, influencing everything from portfolio management to corporate finance. For an undergraduate, a financial education at the University of Chicago is not pursued through a separate business school, but rather through the renowned Kenneth C. Griffin Department of Economics. Students typically major in economics and can choose a specialization in business economics. This structure is intentional. It ensures that the study of business and finance is not treated as a standalone vocational subject, but as an applied field deeply rooted in the powerful analytical framework of economic theory. Before you can understand the how of finance, Chicago insists that you must first master the why. The academic journey for every undergraduate begins with the university's famous core curriculum. This is not a simple checklist of general education classes. It is an intensive, shared intellectual experience designed to build a formidable foundation in how to think critically across a range of disciplines, from humanities and social sciences to the physical and biological sciences. Students learn to dissect complex arguments, construct logical proofs, and engage in spirited, evidence-based debate in small, discussion-based seminars. This rigorous training in analytical thinking provides a powerful toolkit that students then bring to their advanced studies in economics and finance. Within the business economics specialization, the curriculum is as intellectually demanding as one would expect. The courses dive deep into the theoretical underpinnings of financial markets. Students don't just learn financial formulas, they learn the economic proofs from which those formulas are derived. The curriculum covers essential topics like asset pricing, corporate finance, and investment theory, all taught with a signature emphasis on the economic models that govern market behavior. The goal is to cultivate a deep first principles understanding of finance, enabling graduates to analyze and solve novel problems that don't have textbook answers. The academic life is heavily influenced by the groundbreaking research conducted at the university. A central pillar of this research is the Fama Miller Center for Research in Finance, housed within the Chicago Booth School of Business. Named for Nobel laureate Eugene Fama, often called the father of modern finance, and the late Merton Miller, the center supports and promotes frontier research in finance. While the center is part of the Graduate Business School, its influence permeates the entire university. The faculty who teach undergraduates are often the very same scholars who are producing this world-leading research, giving students a direct view of the ideas that are actively shaping the future of the field. The environment at the University of Chicago is one that attracts a particular type of student, intensely curious, analytical, and unafraid of a challenge. The culture is less about pre-professionalism and more about deep intellectual engagement. Student clubs and organizations in finance, such as the Blue Chips Investment Club and the Trot Business Program, provide a bridge between this academic rigor and the professional world. They offer opportunities for students to apply their analytical skills to real-world investing, case competitions, and to network with alumni who are leaders in the financial industry. The career pathways for graduates are, not surprisingly, outstanding. Recruiters from the world's leading finance and consulting firms actively seek out University of Chicago graduates, valuing their unparalleled analytical abilities and their capacity to handle complex problems. The rigorous training prepares them for a wide range of roles, and they are especially well equipped for careers that require deep strategic thinking, such as investment banking, asset management, and economic consulting. In conclusion, the University of Chicago offers a distinct and deeply intellectual pathway to a career in finance. Its strength is not built on vocational training, but on providing a profound understanding of the economic theories that are the bedrock of modern finance. It is a place for those who want to do more than just participate in the markets. It is for those who want to understand them at the most fundamental level. Thank you for joining me. We have now covered 4 exceptional institutions. In our next chapter, we will return to the East Coast and to New York City to explore our 5th and final university, an Ivy League institution with deep ties to the financial world. We will be discussing the finance programs at Columbia University. Hello, and welcome to the final chapter in our survey of 5 of the top universities in the United States for a degree in finance. We began with the historical prestige of Wharton, moved to the urban immersion of NYU Stern, explored the quantitative powerhouse of MIT, and delved into the theoretical rigor of the University of Chicago. For our conclusion, we returned to New York City, but this time to the historic Ivy League campus of Columbia University in the city of New York. Columbia offers a unique synthesis of the advantages we've seen elsewhere. The academic prestige of a top-tier Ivy League institution combined with the vibrant, professional environment of the world's financial capital. It is a place where a classic, broad-based liberal arts education serves as the foundation for a deeply analytical and industry-connected study of finance. Like the University of Chicago, Columbia does not have a separate undergraduate business school. Instead, students pursue finance-related studies through the highly regarded Department of Economics, with the option to major in financial economics. The educational journey at Columbia is shaped by its own version of a rigorous, common academic experience. The famous core curriculum. For over a century, the core has been the hallmark of a Columbia education. It is a set of required courses that all students take, creating a shared intellectual foundation. Through small, discussion-based seminars, students engage with foundational texts in literature, philosophy, history, art, music, and science. This experience is designed to develop formidable skills in critical thinking, argumentation, and textual analysis. This broad intellectual training prepares students to approach the specialized study of finance not just as technicians, but as well-rounded thinkers who can understand the complex historical and societal contexts in which financial markets operate. The financial economics major builds upon this liberal arts foundation with a demanding and analytically focused curriculum. The program provides a deep dive into the theoretical framework of modern finance. Students master the core concepts of microeconomics, macroeconomics, and econometrics before moving on to specialized courses like corporate finance, investment and portfolio theory, and money and banking. The approach is rigorous and quantitative, emphasizing the economic models and statistical methods that are essential for understanding financial behavior. A significant feature of the Columbia experience is its close relationship with the world-renowned Columbia Business School. While it is a graduate institution, its influence and resources are a major benefit to undergraduates. Many of the faculty who teach in the business school also teach undergraduate courses, providing access to leading scholars and practitioners. Moreover, the university is home to the Heilbronn Center for Graham and Dodd Investing, a world-class center dedicated to the principles of value investing, pioneered at Columbia by Benjamin Graham and David Dodd. For students interested in this time-tested investment philosophy, the center provides an unparalleled resource, hosting events and providing a direct link to the intellectual home of this influential approach. Being in New York City provides Columbia students with many of the same advantages as their NYU counterparts, but with a distinct Ivy League flavor. The university's name and reputation carry immense weight, opening doors to exclusive networking events and highly sought-after internships. Students can and do intern at top financial firms during the academic year, blending their rigorous coursework with practical, hands-on experience in the heart of the financial world. Student organizations like the Columbia Financial Investment Group are extremely active, managing their own investment portfolios and hosting a steady stream of speakers and recruiting events with the world's leading financial institutions. In terms of career prospects, Columbia graduates are among the most sought-after candidates for top jobs in finance. The combination of a rigorous Ivy League education, strong quantitative training in economics.
Disclaimer. The information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
And the professional polish gained from being in a New York City environment makes them exceptionally competitive. They are heavily recruited for roles across the financial spectrum, from investment banking and sales and trading to asset management and private equity. In conclusion, Columbia University offers a powerful and compelling pathway into the world of finance. It combines the intellectual breadth of a classic Ivy League education with the deep analytical training of a top-tier economics program, all while being situated in the unmatched professional landscape of New York City. It represents a potent blend of tradition, theoretical rigor, and practical opportunity. Hello and welcome back. Over the past 5 chapters, we have taken an in-depth look at 5 of the most respected universities for the study of finance in the United States. The University of Pennsylvania, New York University, MIT, the University of Chicago, and Columbia University. Each one offers a world-class education and an incredible platform for a future career. But as we have seen, they are not all the same. Each institution possesses a distinct philosophy, culture, and approach to teaching finance. In this chapter, we will bring them all together for a comparative look. Our goal is to highlight the different flavors of finance education available at the highest level, helping you understand which type of environment might align best with different learning styles and career interests. As always, this is for informational purposes only, designed to help you synthesize the details we've discussed so far. Let's begin with the dimension of academic philosophy. This is the core of what makes each school unique. At one end of the spectrum, you have the University of Chicago, which is defined by its intense intellectual and theoretical rigor. A finance education here is an education in economic theory first and foremost. It's for the student who wants to understand the fundamental principles and mathematical proofs that underpin modern finance. Contrast that with NYU's Stern School of Business, whose philosophy is deeply rooted in practical application and industry immersion. Stern's approach is defined by its motto, "An education impossible," emphasizing experiential learning and leveraging its New York City location to the fullest. This is a path for the student who wants to learn by doing, blending classroom theory with real-world experience from day one. Then you have MIT, the quantitative powerhouse. Its philosophy is that finance is an applied science, driven by data, technology, and computational modeling. The education is interdisciplinary, sitting at the intersection of finance, computer science, and engineering. This is the ideal environment for a student who sees the future of finance in algorithms, data analysis, and technological innovation. The Wharton School at the University of Pennsylvania represents a comprehensive, legacy-driven philosophy. As the nation's first business school, its approach is broad and pre-professional. It offers incredible depth across all areas of finance, from corporate finance to investment management, all within a large, vibrant ecosystem designed to launch students into leadership roles. It's for the student seeking a powerful, all-encompassing business education with a blue-chip brand. Finally, Columbia University offers a unique blend, combining the intellectual breadth of its Ivy League core curriculum with the professional advantages of its New York City location. The philosophy here is that a great financial mind needs a broad liberal arts foundation. It's for the student who values critical thinking across many disciplines and wants to apply that well-rounded perspective within the world's financial capital. Next, let's consider the crucial factor of location. 2 of our schools, NYU Stern and Columbia, are in New York City. This provides an unmatched advantage for in-semester internships and direct, daily access to the financial industry. However, they offer different campus experiences, with NYU deeply integrated into the fabric of Greenwich Village and Columbia providing a more traditional, self-contained campus in Morningside Heights. Wharton in Philadelphia and the University of Chicago offer big city environments, but with more traditional, centralized campus cultures. MIT in Cambridge offers a unique environment, part of the Boston area's incredible hub of academia and technology, fostering a culture of innovation. Finally, let's touch upon curriculum structure. We saw 2 main models. Wharton and Stern operate as distinct undergraduate business schools where students are immersed in a business-focused community from the start. In contrast, at the University of Chicago, Columbia, and MIT, finance is a major or concentration pursued within the broader university. This means students are constantly interacting with peers and taking classes with majors in physics, philosophy, or engineering, which can lead to a more diverse academic experience. In summary, there is no single best path. The choice between these exceptional institutions is a choice between different, equally valid educational philosophies. Do you want to learn finance as an economic theorist, a hands-on practitioner, a quantitative scientist, a comprehensive business leader, or a well-rounded Ivy League intellectual? Understanding these core identities is the key to further research. Thank you for joining me for this comparative overview. Now that we have a firm grasp of the universities themselves, our next chapter will explore a critical component of building a career in this field, no matter where you study: the vital role of internships and experiential learning. Hello and welcome back. In our last chapter, we compared the unique educational philosophies of 5 of America's top universities for finance. We saw that whether a school's focus is theoretical, quantitative, or practical, they all provide a world-class academic foundation. However, a modern finance education is built on 2 pillars: what you learn in the classroom and what you do outside of it. Today, we are going to explore that second pillar, the crucial role of internships and experiential learning. In the highly competitive world of finance, practical experience is not just a bonus on a resume. It is an integral part of the learning process. It serves as the bridge between academic theory and professional practice. You can master the concept of a discounted cash flow model in a textbook, but it's a different experience to build one for a real company, under a tight deadline as part of a team. This is what experiential learning provides. It's an opportunity to test, refine, and truly understand the knowledge gained in lectures. The most well-known form of experiential learning is the internship. For an aspiring finance professional, an internship is a structured opportunity to work within a financial firm for a set period, typically during the summer. Its purpose is multifaceted. First and foremost, it allows a student to test drive a potential career path. The day-to-day reality of a job in investment banking is very different from that in asset management or sales and trading. An internship provides an invaluable, real-world glimpse into the culture, the pace, and the specific tasks of a role, helping a student make a more informed decision about their future career. Second, internships are where theoretical knowledge meets the complexities of the real world. Classroom models often work with clean data and clear assumptions. In a professional setting, you learn to work with incomplete information, navigate unexpected market events, and collaborate with a team of diverse individuals. This experience builds practical skills in financial modeling, data analysis, and using professional software terminals that are essential for a full-time role. Finally, an internship is a critical opportunity to begin building a professional network. It allows you to connect with experienced professionals, find mentors, and build relationships with your peers, the same cohort of ambitious individuals you will likely encounter throughout your career. The most pivotal of these experiences is often the summer internship taken between junior and senior year of college. In the finance industry, this has become the primary pipeline for recruiting full-time talent. Firms use this 10 to 12-week period as an extended interview, evaluating not only a candidate's technical skills, but also their work ethic, ability to learn quickly, and fit with the company culture. A successful performance during a junior summer internship often leads to an offer for a full-time position upon graduation. Beyond the traditional summer internship, top universities offer and encourage other forms of experiential learning. As we noted when discussing NYU Stern and Columbia, students at schools and major financial hubs can often hold part-time internships during the school year. This provides a continuous, long-term immersion in the professional world. Other forms of learning include externships, which are short, often week-long job shadowing programs that offer a high-level overview of a firm. Many universities also have student-managed investment funds. These are programs often overseen by faculty, where students manage a real portfolio of assets using real money. This is an incredible hands-on learning experience, forcing students to conduct rigorous research, pitch investment ideas to their peers, and make decisions with real financial consequences. Similarly, case competitions and stock pitch challenges, which are very popular at all top schools, simulate the high-pressure environment of a real financial analysis role, helping students sharpen their analytical and presentation skills. The universities we have profiled play an active role in facilitating these opportunities. Their career services departments are dedicated hubs of activity, building and maintaining strong relationships with a vast network of employers. They organize on-campus recruiting events, where dozens of top firms come to campus to meet students. They host career fairs, technical interview workshops, and networking nights, creating a structured pathway for students to connect with these highly competitive opportunities. In conclusion, while the brand of the university and the rigor of its academic program are fundamentally important, the value of a top-tier finance education is also measured by the opportunities it provides for real-world application. Experiential learning in all its forms is where knowledge is forged into capability. Thank you for joining me. Now that we understand the importance of practical experience, it's time to explore the destinations where these experiences can lead. In our next chapter, we will begin our look at specific career paths, starting with one of the most well-known and sought-after roles for finance graduates: a career in investment banking. Hello and welcome back to our series exploring the pathways from a top finance education to a career in the financial industry. In our last chapter, we delved into the fast-paced, transaction-focused world of investment banking. Today, we shift our perspective to a different side of the industry, one that is less about executing deals and more about the long-term stewardship of capital. We are going to explore the field of asset management. So what is asset management? At its core, it is the professional management of investments on behalf of clients. These clients can be large institutions, such as pension funds managing the retirement savings of millions of people, university endowments, insurance companies, or charitable foundations. They can also be individual investors. The fundamental goal of an asset management firm is to take the capital entrusted to them by these clients and invest it strategically to help it grow over time, all while managing risk according to the client's specific goals and timeline. If investment banking is focused on the creation and sale of securities, asset management is on the other side of that transaction. This is a key industry distinction known as the sell side versus the buy side. The sell side, which includes investment banks, sells financial services and products. The buy side, which includes asset management firms, buys these securities and services for their investment portfolios. A career in asset management, therefore, is a career on the buy side. The roles within an asset management firm are distinct and require a specific set of skills. The most common entry point for a graduate from a top finance program is the role of a research analyst. An analyst is responsible for becoming an expert on a specific industry or sector, such as technology, healthcare, or energy. They conduct incredibly deep, fundamental research on the companies within that sector. This involves analyzing financial statements, building valuation models, studying industry trends, speaking with company management, and assessing the competitive landscape. The end product of this work is an investment recommendation, a well-reasoned argument for why the firm should buy, sell, or hold a particular company's stock or bonds. The work of the research analyst feeds directly to the portfolio manager. The portfolio manager is the key decision maker. They are responsible for the overall strategy and performance of a specific fund or a collection of portfolios. They take in the research and recommendations from their team of analysts, combine it with their own view of the broader market and economy, and make the final decisions on what to invest in. They are ultimately responsible for constructing a diversified portfolio that is designed to meet the fund's specific objectives. Other key roles include the quantitative analyst, or quant, who uses advanced mathematical and statistical models to identify investment opportunities and manage risk. This is a role where the skills developed at a school like MIT are in particularly high demand. And finally, there are traders, who are responsible for the efficient execution of the portfolio manager's decisions, working to buy and sell securities at the best possible price. A career in asset management appeals to a certain mindset. It is deeply analytical and research-driven. Success in this field often requires a genuine passion for understanding businesses and markets, coupled with a patient, long-term perspective. Unlike the deal-driven nature of investment banking, asset management is about building a thesis on a company and having the conviction to hold that investment for many years. It requires a curious mind, a strong analytical framework, and the ability to communicate a complex investment idea clearly and concisely. The career path often involves starting as a research analyst, honing your expertise in a specific sector over several years, and potentially progressing to the role of a portfolio manager. It is an intellectually stimulating field that offers a direct connection to the forces that shape the global economy. In summary, asset management represents a vital function in the financial ecosystem, focused on the careful, research-based, long-term growth of capital. It offers a rewarding career for those who are passionate about in-depth analysis and the art and science of investing. Thank you for listening. Now that we've covered the foundational buy-side world of asset management, our next chapter will explore another, often more aggressive and entrepreneurial, corner of the buy side: the dynamic and fascinating world of hedge funds. Hello and welcome back. In our last discussion, we explored the role of asset management, focusing on its function as a long-term steward of capital. Today, we remain on the buy side of the financial world, but we turn our attention to a sector known for its flexibility, its entrepreneurial spirit, and its use of a wide array of investment strategies. We are going to delve into the world of hedge funds. First, it's important to understand what a hedge fund is. In simple terms, a hedge fund is a private investment partnership that pools capital from its investors and invests it in a variety of assets. What truly distinguishes hedge funds from other investment vehicles, like mutual funds, is their flexibility. They have a much wider mandate, allowing them to invest in almost anything: stocks, bonds, currencies, commodities, and complex financial instruments known as derivatives. The name hedge fund comes from the original strategy of hedging, which means trying to reduce risk. An early strategy was to buy a portfolio of stocks that were expected to perform well, while at the same time, selling short another portfolio of stocks that were expected to perform poorly. The goal was to generate returns while being hedged against the overall direction of the market. While this principle of risk management is still important, today, different hedge funds employ a vast number of strategies, many of which can involve taking on significant and calculated risks. One of the key tools that gives hedge funds their flexibility is the ability to short sell or go short. This is the opposite of a traditional investment. Instead of buying a stock and hoping its price goes up, short selling involves borrowing a stock, selling it on the open market, and hoping its price goes down. If the price does fall, the fund can buy the stock back at the lower price, return the borrowed shares, and keep the difference as a profit. This ability to profit from a security's decline is a fundamental tool for many hedge fund strategies. The strategies themselves are incredibly diverse. A long/short equity fund is perhaps the most traditional, taking long positions in undervalued companies and short positions in overvalued ones. A global macro fund makes large-scale bets on broad economic trends, such as predicting changes in interest rates, currency exchange rates, or the political direction of a country. An event-driven fund focuses on specific corporate events, like a merger or an acquisition, trying to profit from the predictable price movements that often surround such an announcement. And quantitative funds, often called quant funds, use powerful computers and complex mathematical algorithms to identify and execute trades, often at extremely high speeds. The career structure within a hedge fund can be quite different from a large bank. Funds are often much smaller, with leaner teams and a more entrepreneurial culture. The most common entry point for a graduate is the role of an investment analyst. Much like in asset management, an analyst is responsible for deep research to generate investment ideas. However, the pressure and focus can be even more intense. The goal is not just to find a good company, but to find a unique insight or angle that the rest of the market has missed. These ideas are then pitched to a portfolio manager, who makes the final decision on whether to allocate the fund's capital to that trade. Because the teams are smaller, analysts often have a more direct impact on the portfolio, and may be given more responsibility earlier in their careers. The environment in a hedge fund is relentlessly performance-driven. Success is measured by the ability to generate positive returns, often referred to as alpha. This creates an intellectually demanding and highly competitive atmosphere. The mindset required is one of deep analytical rigor, independent thinking, and a strong sense of conviction. It is a field for those who are passionate about solving complex puzzles in the marketplace, and who are comfortable with taking calculated risks based on their research. In summary, a career in the hedge fund industry offers a path that is dynamic, entrepreneurial, and intellectually stimulating. It is an environment that rewards deep thinking, creativity, and a relentless focus on performance. Thank you for joining me. We have now covered several career paths that involve investing in publicly traded securities. In our next chapter, we will shift our focus to an area of finance that deals with investing in entire companies that are not listed on a public stock exchange. The world of private equity. Hello and welcome back. In our recent chapters, we've navigated the dynamic worlds of asset management and hedge funds, both of which primarily focus on investing in publicly traded securities like stocks and bonds. Today, we explore a different investment universe entirely. We are going to discuss a field where the objective isn't just to invest in a company, but to buy it, own it, and actively work to improve it. This is the world of private equity. So what is private equity? At its core, private equity, or PE, is a type of investment that involves buying and holding stakes in companies that are not publicly traded on a stock exchange. A private equity firm raises capital from large investors such as pension funds, endowments, and wealthy individuals into a fund. It then uses that capital to acquire private companies, or in some cases, to acquire a public company and take it private. The most well-known strategy in private equity is the leveraged buyout, or LBO. This is the process of acquiring a company using a combination of the private equity fund's own money, known as equity, and a significant amount of borrowed money, known as debt or leverage. The assets of the company being acquired are often used as collateral for the loans. The fundamental goal is to use this borrowed capital to make the acquisition. Then over a period of several years, improve the company's operations and profitability. The ultimate aim is to sell the company at a later date for a substantially higher price, pay back the debt, and generate a strong return for the fund's investors. This brings us to the core of the private equity model, value creation. Unlike a public market investor who might own a small fraction of a company, a private equity firm typically owns a controlling stake, or even the entire company. This ownership gives them the power to make significant changes. A PE firm doesn't just provide capital, it provides active operational and strategic oversight. The value creation process can involve several key activities. This might include bringing in a new management team, streamlining operations to make the business more efficient, expanding the company into new markets, or acquiring smaller companies to help it grow. The mindset is that of a long-term business owner, not a temporary stock trader. A career in private equity is one of the most sought-after paths for finance professionals. The journey often begins after spending a few years working in a demanding field like investment banking or management consulting. The typical entry-level role is that of a private equity associate. An associate's work is intensely analytical. A significant part of the job involves financial modeling, specifically building complex LBO models to determine how much the firm can pay for a target company and what the potential returns might be. Another critical task for an associate is due diligence. This is the exhaustive process of investigating a potential investment. It involves analyzing the target company's financial health, its position in the market, its competitive advantages, and any potential risks. Associates spend countless hours combing through data rooms, speaking with industry experts, and pressure testing every assumption in their investment thesis. Once a company is acquired and becomes a portfolio company, associates also help monitor its performance and assist with the strategic initiatives designed to increase its value. The career path is highly structured, typically progressing from associate to vice president, then to principal, and ultimately to partner or managing director. The required skill set is a unique blend of deep financial expertise and sharp business acumen. You need the quantitative skills of a top-tier financial analyst combined with the strategic mindset of a CEO. It is a field for individuals who are not just interested in analyzing businesses, but in actively building them. In summary, private equity offers a demanding and rewarding career for those who want to be deeply involved in the ownership and operation of businesses. It represents a shift from analyzing markets to shaping companies, making it a powerful and influential force within the global economy. Thank you for listening. We have now explored the world of buying established companies. In our next chapter, we will look at the other end of the company lifecycle, the exciting and high-risk, high-reward field of investing in brand-new startups. We will be discussing venture capital. Hello and welcome back. In our last chapter, we delved into the world of private equity, a field focused on acquiring and improving established businesses. Today, we journey to the very beginning of the corporate lifecycle. We're going to explore the high-stakes, high-reward field that provides the crucial fuel for innovation and funds the disruptive ideas of tomorrow. This is the world of venture capital. So what is venture capital, or VC? At its heart, venture capital is a form of private financing provided by venture capital firms to startups, early-stage, and emerging companies that have been deemed to have high growth potential. A VC firm raises a large pool of money, called a fund, from investors known as limited partners. These are typically large institutions like pension funds and university endowments. The VC firm then acts as the general partner, investing that fund's capital into a portfolio of promising young companies in exchange for an equity stake, meaning ownership, in those businesses. The core of the venture capital model is the understanding of risk and reward. It is a known fact that the vast majority of startups fail. A venture capitalist operates with the knowledge that many of their investments will likely result in a complete loss. However, the goal is that the one or two wildly successful companies in their portfolio, the home runs, will generate such massive returns that they not only cover all the losses from the failed ventures, but also provide a significant overall profit for the fund. VCs provide capital at various stages of a startup's life. Seed funding might be the very first institutional money a company receives to build a prototype and validate an idea. A Series A round comes later, helping a company with a proven product to build out its sales and marketing teams. Series B, C, and subsequent rounds provide even more capital to help a successful business scale its operations rapidly. But the role of a venture capitalist goes far beyond simply writing a check. This is a key differentiator. VCs take an active role in helping their portfolio companies succeed. When a firm invests, one of its partners will often take a seat on the startup's board of directors. From this position, they act as a key advisor and mentor to the founders. They leverage their experience and their network to help the company with everything from refining its business strategy, to hiring key executives, to making introductions to potential major customers. They are not passive investors. They are active partners in the building of a business. A career in venture capital is unique and attracts a specific type of individual. The entry-level role is often an analyst or associate. A huge part of this job is sourcing, the process of finding the next great investment opportunity. This involves networking constantly, attending industry conferences and startup demo days, and meeting with hundreds of entrepreneurs to hear their pitches. For the most promising companies, the associate then conducts due diligence, which involves deep research into the founding team, the technology, the size of the potential market, and the competitive landscape. As one becomes more senior, moving to roles like principal and then partner, the responsibilities shift from sourcing and analysis to leading investment deals, negotiating terms, sitting on boards of portfolio companies, and eventually raising capital for the firm's next fund. The skill set required for a successful career in venture capital is a unique blend. While strong financial and analytical skills are necessary, they are not sufficient. A great VC needs an insatiable curiosity about technology and new business models. They need the ability to build a vast network and the judgment to assess people and ideas long before there's any data to prove they will succeed. It is a career that sits at the fascinating intersection of finance, technology, strategy, and human psychology. In summary, venture capital is the financial engine of the innovation economy. It offers a career path for those who are passionate about the future, who are comfortable with ambiguity and risk, and who want to play a direct role in helping visionary entrepreneurs build the iconic companies of tomorrow. Thank you for listening. Having now explored the major investment-focused career paths, our next chapter will return to the investment bank to explore a different, equally vital function: the fast-paced and market-driven world of sales and trading. Hello and welcome back. In our recent chapters, we've focused on career paths that involve long-term investing and company building, such as private equity and venture capital. Today, we return to the sell side and the fast-paced heart of a major investment bank. We are going to explore the division that connects the bank and its clients to the live, real-time flow of the global financial markets. This is the world of sales and trading. Often referred to as the markets division, sales and trading, or S&T, is the engine room of a bank. It's where financial instruments like stocks, bonds, currencies, and commodities are bought and sold in massive volumes every second of the day. Unlike the project-based work of investment banking, which can take months to complete a single deal, the timeline in S&T is immediate. Success and failure are measured in minutes, or even seconds. The division is made up of two distinct but deeply interconnected roles: sales and trading. Let's first look at the sales role, often called institutional sales. A sales professional is a relationship manager. Their clients are the large institutional investors we've discussed before, the buy side, which includes asset managers, hedge funds, pension funds, and corporate treasurers. The job of a salesperson is to be the primary point of contact between these clients and the bank. They must deeply understand their clients' investment strategies and needs. They provide them with the bank's research, market analysis, and investment ideas. When a client decides they want to buy or sell a security, the salesperson is the one who facilitates that order, working directly with the bank's traders to get the transaction done. It is a role that requires exceptional communication skills, a strong understanding of market dynamics, and the ability to build lasting, trusted relationships. On the other side of the partnership is the trader. A trader is a specialist in a particular market or financial product. Their primary function is to make markets for the bank's clients. This is a critical concept. Market making means the trader stands ready to both buy and sell a specific security at any given time. They will quote a bid price, which is the price at which the bank is willing to buy, and a slightly higher ask price, which is the price at which the bank is willing to sell. The small difference between these two prices is known as the bid-ask spread, and it is a fundamental way the trading division generates revenue. A trader's job is to manage the bank's inventory of securities, known as their book, and to handle the risk that comes with these positions. all while executing client orders as efficiently as possible. The environment where this all takes place is the legendary trading floor. It is a vast open space filled with rows of desks, each covered with multiple computer screens displaying a constant stream of market data, news, and communications. The atmosphere is electric, often loud, and defined by an incredible intensity and flow of information. Decisions must be made in an instant based on constantly changing market conditions. Within sales and trading, individuals specialize in a specific asset class. Equities trading focuses on stocks. Fixed income is a broad category that includes trading government and corporate bonds and other debt-related products.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
FICC, which stands for Fixed Income, Currencies and Commodities, involves trading foreign exchange rates or physical commodities like oil, gas, and metals. And derivatives trading involves more complex instruments that derive their value from an underlying asset, like options or futures. The skill set required for this field is distinct. Sales professionals need to be personable, persuasive, and service-oriented. Traders, on the other hand, need to be highly analytical, disciplined, and comfortable with quantitative analysis and risk-taking. Both roles require the ability to process immense amounts of information quickly and to perform at a high level under significant pressure. It is a career path for those who are competitive, resilient, and who have a deep passion for the day-to-day action of the financial markets. In summary, a career in sales and trading offers a front-row seat to the global economy in motion. It is a demanding and dynamic field that serves a vital function in providing the liquidity that keeps financial markets running smoothly. Thank you for joining me. We have now covered the major career paths that a top finance degree can lead to. In our 15th and final chapter, we will bring our entire series to a close, summarizing the key lessons and offering some concluding thoughts on the journey of building a foundation for a successful career in finance. Hello, and welcome back for the final chapter of our series. Over the last 14 chapters, we have embarked on a comprehensive journey together. We began by exploring the halls of 5 of America's most distinguished universities, dissecting their unique approaches to finance education. From there, we navigated the complex and varied landscape of the financial industry itself, examining the distinct career paths that a world-class education can help make possible. As we bring our series to a close, our goal is to synthesize these two halves of our discussion, the academic and the professional, and reflect on the foundational principles of building a career in this dynamic field. Our exploration of the top universities revealed a crucial truth. There is no single best school. Instead, we found a spectrum of excellence, each with its own philosophy. We saw the legacy and comprehensive business training of Wharton, the deep industry immersion of NYU Stern, the uncompromising quantitative rigor of MIT, the profound theoretical depth of the University of Chicago, and the powerful blend of an Ivy League liberal arts core with a New York City advantage at Columbia. The key takeaway is that the right foundation is about finding the right fit. It's about aligning your personal learning style, your intellectual curiosity, and your professional aspirations with the culture and strengths of an institution. A great education in finance provides more than just technical skills. It provides a framework for thinking, a network of peers and mentors, and a platform of opportunities from which to launch a career. From this academic foundation, we turned to the professional world and discovered that finance is not a single monolithic career. It is a diverse ecosystem of highly specialized roles, each demanding a unique combination of skills and temperament. We contrasted the advisory, deal-making world of investment banking with the long-term, research-driven stewardship of asset management. We explored the entrepreneurial and flexible strategies of hedge funds against the operational, ownership-focused model of private equity. We saw the difference between funding the next wave of innovation in venture capital and providing immediate liquidity to the global markets in sales and trading. This exploration shows that a career in finance offers a path for many kinds of analytical minds. Whether you are motivated by building relationships, solving complex mathematical puzzles, identifying long-term value, funding disruptive ideas, or thriving in the heat of the market, there is a specialized role where your talents can be applied. Across all these varied paths, however, we can see a set of unifying threads. Certain qualities are universally valuable. a deep and rigorous analytical ability is paramount. Strong quantitative skills are the language of the industry. The ability to communicate a complex idea with clarity and conviction is what separates good analysis from impactful results. And perhaps most importantly, a high degree of resilience and a commitment to continuous learning are essential in a field that is in a constant state of evolution. The financial industry of tomorrow will not be the same as it is today. The forces of technology, from artificial intelligence to blockchain, are reshaping how markets operate. An increasing focus on sustainable and responsible investing is changing how capital is allocated. The ability to adapt, to acquire new skills, and to understand these shifting currents will be the defining characteristic of the next generation of leaders. Your degree, no matter how prestigious, is not the end of your education. It is simply the beginning. This series was designed to serve as a map, to provide you with a clearer understanding of the terrain of finance education and the professional world it leads to. We have presented this information for educational and informational purposes only, with the hope that it empowers you in your own journey of research and discovery. The path you choose will be uniquely your own, shaped by your ambitions, your talents, and your hard work. Thank you for joining me on this journey. We hope it has been both informative and insightful as you consider the foundations of your future.
Disclaimer: the information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.